All and welcome to another edition of Local Legislator Live at 11. Welcome, welcome, welcome. We're glad to see you. We hope you had a wonderful week. And speaking of wonderful, we have again a wonderful guest this morning. I know I say that every week, but they all are wonderful. And when they're not wonderful, I won't say it. But in this case, she is the cream of the crop of the Virginia licensed agents out there, insurance agents. Michelle Holiday Riley. Good morning to you, Michelle.
Good morning.
We are so happy to see you here, and we love the background that you have. That blue just makes blue's my favorite color. Just makes me happy. So, Michelle, we're going to jump right into this and share some of your wisdom with our audience out there. Who is Michelle Holiday Riley, and why did you choose insurance as your career choice?
Well, like you said earlier, I am a Virginia licensed agent here in the local Hampton Roads area, and I service the state of Virginia. Um, and honestly, insurance kind of fell upon me. It wasn't something that I was seeking out or chose to do. I actually had somebody that I knew that I had worked with previously who actually isn't even in insurance anymore, who got into it and said, I think that you would do exceptionally well with this. You love working with people and helping people. I want you to try it. And I was kind of at a point where I was ready for something different. I was in my late 20s and looking to do something a little bit more fun and help people in a different realm. And so here I am.
And here we are with you. Life insurance. That's one of those subjects that we don't tend to talk about too much at the dinner table, but we all know that we should. Tell us, why is life insurance so important to have?
Life insurance is important for so many reasons. It really, it's there to protect the people that you love in the case that you pass away suddenly, or if it's, when you kind of expect it later in life or plan for later in life. It's there to basically be a way to catch the people that are left behind in your passing and to really serve the purpose of being able to pass along money to them in a safe way. I think that protects your family.
Okay, now we hear all types of terms and jargons about life insurance. We hear about whole life. We hear about permanent life. We hear about term life. Ugh! What is the way? What's the difference between this, that, and this?
Well, I'm going to start with term life. I feel like that is something that's what a lot of people do, especially in the beginning of life. Term life covers you for a term of time, whether it be 5 years, 10 years, 20 years, or 30 years. And the reason why I like term life for people is it allows you to have a big amount of money, whether it be 100,000 up to millions, actually, and you pay a less premium or monthly payments on that type of term policy than you would for a permanent policy. So for my people that have big mortgages or have a lot of kids that they need to leave behind and take care of, or have significant debt, or other reasons for having a big amount of money, but they don't have the pocketbooks to do a big monthly payment, it really serves a great purpose for people. Permanent insurance is something that covers you permanently, or supposed to. And that would be like your universal life or whole life. That is what permanent insurance is. It covers you for your permanent whole life. And it's great because it grows interest and cash value over time. So it's guaranteed to be there and locks in a rate for you your whole life. So again, term, you got a certain amount of time that it's locked in with a rate. Permanent, you're locking it in for your whole life. So that is a nice benefit of that.
Well, thank you for explaining that. Now, many of us out there in the workspace, we have these group insurance programs through our jobs. Why is it important to have an insurance program or policy outside of that?
So I love what group policies offer, and a lot of times I see you get 2 or 3 times what your salary is, and you're paying significantly less than you would outside of the free market is what I guess that you would say. So I definitely suggest people who have the option to have group policies get them. For the amount of money that you're paying into it, I think it's a great benefit. But things happen in life that we don't expect, and I think last year was a prime example of that. You know,
Mm.
you can have benefits that are suddenly taken away or no longer an option by your company, depending on who your company is. Or you might get laid off, or you might need to change jobs because of unexpected events. And again, last year was a prime example of how life can change in a moment or a second for all of us. Um, so that's why I really honestly suggest having out something outside of work that covers you, because no matter whether you are in a position or not, your life outside of work is still there and that need is still there.
Well, indeed, COVID caught us all by surprise, not just here in America, but around the world. So,
Yes.
very good points indeed. Now, speaking of beneficiaries,
Hmm.
how does a life insurance policy benefit the beneficiary?
A life policy benefits the beneficiary by passing along funds to whomever the beneficiary is. And you're not seeing that you're being taxed on it and things. So, when you have somebody pass away normally in life, and let's say they've got savings accounts or different types of stocks and bonds, those kinds of things. Um, when you pass away, especially if it's somebody like my grandmother or maybe an aunt or uncle or whomever, or even it could be a friend that decides to leave me money, because life is very different these days. You'd be surprised who people leave their money to. Um, Uncle Sam wants his money and his dollar. We all know that. That's not changing in America anytime soon. It is what it is. It's something we all have to expect. But when you have somebody pass away and you leave life insurance, that cannot be taxed. So it really benefits the beneficiary a lot in that aspect. And it's allowing them to continue to live on the life, especially if it's a family member like a spouse or children, to continue to live the life that they've been living with your income that they expected, especially. So if my husband were to suddenly pass away, I could not afford our home or our life without his income. And that would leave me in a devastated situation, in which, of course, that would not be something desirable. I'm already going to be grieving and going through a lot of things, but having to have the stress of not only losing him, but having to immediately figure out how to sell this house and how to figure out our bills and everything is going to be overwhelming, to be honest. So having a life insurance policy come over to me with money to be able to, in an adequate amount of time, figure out what my next steps are in life is going to have resounding effects.
And can you have multiple beneficiaries? Let's say you have 3 or 4 kids.
Mhm.
Can you leave things to each one of them, and can it be different in terms of denominations that you give them?
Yes. So, for example, you have your primary beneficiary. So you could say, I want my spouse to have 50%, and I want my mom and my dad to have 25 and 25. Or I can just have my spouse have 100%. You also have secondary beneficiaries. So I use the example, if my husband and I are in a car accident at the same time, which could happen, and we both pass away. I don't want that money to go to my estate. I want it to go to a specific person. So my secondary beneficiary would be my mother. She would get all of the money in the case that my husband and I pass away at the same time. And I can pick multiple people, and you can even pick organizations. So if you wanted to leave money to a church or some other, charity, you have that option as well. So if you wanted to say, okay, I've got $1 million policy and I want 5% to go to my church, but the rest to go to my family, you can do that, which is a really cool option.
Now, as an agent, do you advise your clients to have secondary beneficiaries just in case?
I do. It's very rare that I have people who don't do secondary beneficiaries. It's my people that are more estranged from families, or are kind of in a transition period, that sometimes they won't put one on. But I do find that a lot of times, even people that don't have secondary beneficiaries later on in life will have somebody as backup. I do want to pivot back to kids. So if you have kids, for example, if they are under the age of 18 and you want to leave them money, I do not recommend having them as a beneficiary, because until they're 18, they can't get a hold of the money. So let's say that my husband and I had kids, and we were divorced. This was a fun situation. So I don't want that money to go to my ex-spouse, which I see a lot of, but I want the money to be there for my kids. But I know that he's probably going to be the person that would take over custody in the case of my untimely demise. I tell people, leave that money and mark it as such on the policy that, your sister, my sister, or my aunt or my mother or whomever is going to be the executor of the money until the kids turn 18, and at which time, or you can pick different ages, because we all know that when you turn 18 doesn't necessarily mean you're an adult these days, so it helps out
Right.
too.
Very interesting scenario about the divorced situation. I would
Mhm.
imagine that in many times, if you don't stay on top of things, many people divorce, one passes away, and the money goes to that person that you don't even like anymore.
Yes, we've
Yeah.
had that happen several times, and in fact, one of the ladies that I know that works for my company, she was in a long-term relationship with somebody, but they were not married, and being a licensed insurance agent, she never had or pushed him to update his beneficiaries, and he very much disliked his ex. Well, it was actually technically still his spouse. She refused to divorce him. Again, very weird situation, but he passed away unexpectedly and all the money went to her, and it was a very, very unfun situation for her. And I know that that was ultimately not what his wishes would have been, so it was very interesting.
Wow, very interesting indeed. To our listeners out there, if you enjoy this interview and you'd like to hear more, make sure you subscribe to our YouTube channel and like our Facebook page. And most importantly, make sure you leave us a comment and tell us what you love about the program. Well, Michelle, you talked earlier about cash value in
Hmm.
terms of policies. Talk to us about that. How does that work? The loan situation, taking loans out, taking cash out. Is it beneficial for people to do that? And if so, what situations would it be advisable to do something like that?
So when you have a permanent policy, like I stated earlier, you've got cash value that builds up over time, and you have interest that builds up over time. I have someone in my office who, at a young age and in his 20s, did a specific type of policy for life, but he also wanted to put that in for retirement. So what he's doing is he locked in a great rate because he was young and healthy, and versus putting money into, and he still has retirement accounts, but he's putting a little bit less into some of those retirements and putting some into this life policy so that he can take cash value out later on, because the interest rate is really good. It's going to definitely be better than what you see on any type of savings account and things like that. And if he does have an emergency in life, whether that, it could be a million different things. We all know emergencies happen with all across the board. He can come in and take a life loan and things like that. So it's an option. The one thing that I tell people with life loans when they come in is you have, two options with life loans. You can pay that back, or you can opt to not pay it back. But if you do not pay it back, then you have to realize, you get an illustration when you do a life policy, and it says, as you put in a little bit every single month, it's going to grow, and this is what the illustrated, growth is on it. So if you take some of it out, it's not going to have that same schedule anymore, because you're, taking some of it out. So you have to remember that the promises, or the outline looking of what that is going to be for death benefit as well as cash value, is going to be decreased. So that's why a lot of people, they still want to have that death benefit grow, or they still want to see the policy be at the same numbers, so they opt to pay it back. But it's just an option within the policy.
Okay. Now, death is not a happy subject to talk about, but we all know that it needs to happen with the family together.
Mhm.
How do you how do you have those different type of conversations, and do you recommend we have those conversations, say in our 30s, our 40s, or when in life should we have those kind of conversations? Because I know personally we had our very first one just a few years ago. We've been putting it off and putting it off, but as the parents are getting older, thank God my parents are both still alive, we realized that, you know what, we need to have this conversation, and we need to do it where everyone is there under one roof, so we can all be in agreement that this are these are their wishes going forward. And we chose Thanksgiving to have that conversation. But I know there's a lot of families out there that for whatever reason they're avoiding having those conversations. Do you advise we have those type of deep conversations, and what should we be talking about?
I definitely do. And I don't think that you need to wait to, be older. I feel like, you can be a teenager and have those conversations, as long as you are cognizant, well-rounded human being, and we have some teenagers that are, very amazing with their levels of things. And every family is different. But the reality is, being prepared for death is not a bad thing. Again, in our minds, we all say, okay, we're going to live out, X amount of years and potentially die within this age range. But being prepared and having conversations and having things set between parents or other family members is responsible. I have had so many situations over the years in which people come into my office and they are, of course, when your heart's grieving and you're stressed out on top of everything else in life that you're used to dealing with, it's a lot. So I tell people, by having passwords and accounts and things saved in a certain area and telling your spouse or your children or your parents where things are is really responsible. And we're all going to die. It's okay. It is absolutely okay. It's a guarantee that I can give us. We've all been born. We're all going to die. We just don't know when. And so again, it's hard emotionally for us because we love people, and to let go of something and to grieve prematurely is hard for us. We're human beings. We care. We have heart. We have soul. But part of caring about somebody and part of caring about family is being prepared and having responsible conversations.
Mm. Thank you so much for that advice. Now, once a loved one does pass, from what I hear, you can simply go to the bank and say, listen, my dad died last week. I'd like to have all his assets. Does it quite work that way?
Oh, I wish. I really do wish. That is something that is can be difficult. If there is something with legal paperwork that says that you're the executor and things like that, and you've got all of that written out, then it can be somewhat simple. It's a lot of paperwork, a lot of time. But when somebody doesn't have, legal paperwork like a trust, a will, executor, and things like that to say this is how things are going to go, then everything goes to probate. And I can tell you during COVID, especially last year, court systems don't go so fast.
Mm.
So it was very challenging for people who hadn't pre-planned for things. So again, it's preparing for the unexpected things in life, and having the responsibility to do things. I honestly, I don't do these things, but I just like to say, when you're young and maybe you don't have as many assets or, money coming in, I think a will is a great thing to have in place, and to have an executor and just, different things set up. But as we become more well-rounded adults with more things and more assets and incomes and things like that, having a trust would be something that I highly do recommend for people to do. My grandmother did one before she passed, and I can tell you that it really made all the difference in the world for my mother and I, that everything was just taken care of. It was a really hard situation, and I loved that woman more than any other person in this world. So when she passed, it was very hard. But again, having that trust set up and not having to worry about a lot of the taxes and things, and just being able to easily transfer things between my mother and I and get things set up, and not having to argue with family members because it's definite in writing, her wishes, was a blessing.
It makes so much difference. And personally, I found out the hard way because it was a relative that died and did not have any preparations. And it was a nightmare trying to, number one, find out where the information was. Did they even have insurance? And once we found out they did, how do we access it? Who are the people we're calling? So it is incumbent upon all of us out there listening and watching this this podcast here to make sure that you have those things not only in order, but have them in a place where you can find them in the event that a premature death does happen. But you know what? They say that the first time it happens, it's on you. If it happens again, so we took our lessons from the first time it happened and have those conversations, have those binders. We know where they are, and in case anything's happened. So we really wanted to encourage everyone out there that's looking at this to make sure you have those things in place and do not procrastinate, because tomorrow is not promised. And
Right.
I will tell you, it can be a nightmarish situation if you do not know where those assets are and how to get to them. Because the last thing you want is for the state to grab that stuff up. As far as I'm concerned, they have enough money.
They do.
They don't need any more of mine. So thank you so much, Michelle Holiday Riley. We really appreciate you educating us on why we need insurance and really breaking it down in layman's terms where we truly understand it and not using a bunch of jargon and having us scratching our heads. Okay, she just said that, but what does that mean? Thank you for putting it in the terms that we can understand and, more importantly, put into action. My last question for you, Michelle. How can people get in touch with you, and where can we find more information about this insurance world?
In all honesty, you can do a lot of different searches online and things like that on insurance, but you want to make sure that you're double checking everything. As we know, the World Wide Web can be a very tricky place. If you want to reach out to me personally, I would love to hear from anybody. My office number is going to be 757-874-5400, and I'd be happy to talk to anybody at any time with any questions.
Great. Well, thank you so much, Michelle. And for our viewers out there, once again, this interview today is sponsored by SSK Edits, where they offer video editing, they offer graphic designs, and they also offer instructions. You can get a hold of my man, Kenny Hodgins, at kenny.hodgins@gmail.com. He is the man for the job. And before we end this podcast, I just want to share with the audience out there to remember what our mission is here at locallegislator.net, where this show, Local Legislator Live at 11, is a component of, where our only desire is to create a better informed electorate through, let me get this right, making local government and business simple, because they are as one. Michelle, thank you so much for being here, and we wish you Godspeed in everything that you do.
Thank you so much, Charles. Have a wonderful day.
You too. Take care, everyone.